Hello again, I'm Anderson. I invest for myself, focused on Brazilian and Latin American buy and hold stocks. And in this channel, I express my ideas, thoughts, and portfolio. Today, I will analyze Vulcabrás, the footwear leader in Brazil. By this name, probably few Brazilians know the company, but by the brands the company owns, all Brazilians, or at least mostly, will certainly know. Vulcabrás owns Olympikus, that is the leader on footwear in Brazil, and also Mizuno and Under Armour operations in Brazil. 86% of the entire revenue comes from footwear, and the company is trying to diversify to clothes, especially jean ones, through Under Armour. But by now, the main bet is the Corre line, the run. This is the footwear that became very, very popular on Brazilian Strava, and despite Olympikus, despite the fact that Olympikus used to be more affordable footwear, these one are premium ones. Vulcabrás passed a very important turnaround from 2014 to 2016, and since 2020 is a company that has a very interesting CAGR, both on revenue and profits. So let's see some numbers. We see that net revenue multiplied by 2, double from 2021. The net profit multiplied by 3, threefold, almost fourfold. So very interesting numbers. Let's apply our rules on Vulcabrás. Do I understand how the company makes money? Yes, it's not difficult in this case. Vulcabrás produces footwear and sell on Brazil through direct channels, especially e-commerce that is growing very fast, but more importantly, through 15,000 small stores point of sales. They have some operations in other countries like Argentina, but the overall is a small operations related to the entire revenue. Important thing, they have the own brands, Olympikus, and they license some brands in Brazil, like Under Armour and Mizuno. So we could divide the do I understand how the company makes money in two parts. They operate their own brands and some licensed brands are in interesting point here. Will people be using this product in 20 years? For sure. And especially, we are seeing a secular trend that people go more to gym, and the wellness is more and more important. All products and services that are beauty related on body related are growing, so probably people will use more footwear in 20 years. Does the company have a durable competitive advantage? Well, it's a little bit difficult to say durable and especially a strong one. Olympikus is very important brand, is the leader, but despite being the leader by decades, the company have had very bad moments from 2013, 2014 until 2016-17. Now the company found a new market with the run footwear, the Corre line, but in 5 years or 10 years, it's very difficult to predict. I think that the company have a competitive advantage because they produce in Brazil fully vertically integrated, and Brazil is a market that has some tariffs from imported goods, but anyway, it's not so strong as a bank or some other companies that has a very durable and strong moat. We could put here like 6 of 10. Is the company recession proof? Well, in general, retail are not recession proof. This case is a little bit different. Even being not fully recession proof, the fact is that Olympikus has both the premium and affordable footwear. And so when consumer is more constrained, they used to search for more affordable footwear, and Olympikus is the biggest provider. So it's a company that we could mark, even being, despite being retail, like mostly recession proof. Is there confidence in the management? Fully confidence in the management. Nowadays, the CEO is Pedro Bartelli, that owns a very important part of the company. So we are talking here of skin in the game, and he came from the family that found the company 50, 70 years ago. So and under, understand a lot of the business and Brazilian market, Brazilian regulations. So there is a very strong confidence in the management. Has the company been listed on the stock exchange for more than 5 years? Yes, they are from decades on Brazilian stock exchange. So let's go to the financial rules. Has the company shown revenue growth for the last 5 years? Yes, the company showed strong revenue growth. Let's see here, from the last 5 years, from 2021 to 2025, we are talking from a revenue that doubled. And the CAGR I point here is like 17%. So very good. We could mark as a complete question. Earnings growth for the last 5 years. So let's see. Has the company shown earnings growth over the last 5 years? Yes. And very important earnings growth. A CAGR of, let's see, I pointed here the CAGR. Well, I'm not sure, but that I put the CAGR. But we see the net profit multiplying by 3. So okay. Is the price earnings ratio low? Yes, but the price earnings now that we see on financial metrics is wrong. It is because on 2025, last year, the company had a very strong profit that became from tax regulation. So the idea is that in the past, company had some losses and could use these losses on 2025. So it increased the profit in a one-off way. It will not occur in the next year, in this year or next ones, and inflate price to earnings. Nowadays, price earnings is like if we use only financial metrics with the inflated numbers or inflated profits of 25, price earnings like 3.7, 3.9. But if we use recurring or forwarded to 2026, we are talking more something like 8 or 9. Not so low, but still interesting to a company that grow 20% yearly on both revenue and profit. So interesting to point. Does the company have constant dividend growth? Wow. The company has strong dividend growth, but not consistent. The word consistent here fail. And the dividend, in fact, 2025 is a one-off dividend because from 2026 and 2026 onward, the dividend rules change, and so it could be taxed. It depends who receives, but because these regulations on 2025, company distribute a lot of dividend in a one-off basis. So we could mark that company has a strong dividend growth in the last 5 years, but not exactly consistent. Has the company paid um, 5% plus dividend year over the last 5 years? Strictly, no. The company pays much more, but not 5% every year. Has the company been profitable for the last 5 years? Yes. The last loss company reported was 2020 by COVID. So since 2021, it has been profitable. Has the company never reported a loss on fiscal year? Wrong. Company reported several losses on 2020, 2014, 2015, probably 2016. Does the company have our enrolled return on equity above 10%? Yes. On recurring basis, the return on equity is like 23%, 22%. So very high return. Is the company debt right? Is the company's debt high? No. The company almost has no debt. In fact, if they wanted, if it was necessary, they could increase that to invest more. For example, to produce the Corre line, they have almost used all fabric capacity. So if it was necessary, they could have more debt to invest. Does the company have debt lower than equity? Strongly, by a wide margin. The net debt is like 6 million reais, and shareholder equity something like 2 billion and a half, 2,500,000,000 reais. So let's analyze projections and in the future of the company. What are main investing theses? Well, the companies here we have CAGR, probably. Yes, CAGR of revenue in the last 5 years, 24%. CAGR on net profit on the last 5 years, 100%, but this number is wrong because profit on 2025 is one-off, is inflated. So we could analyze with these eyes. Okay, so what we could expect in the future? In the next 3 or 5, maybe 10 years, we could expect that the Corre line and the premium footwear that Vulcabrás developed on Olympikus brand gain more and more market and provide better margins to the company. We see that the company has a good momentum on product. Corre is very well perceived by runners on Strava, so it's different from what the company used to be. That is the more affordable product, not so recognized, not a product that is recognized by quality. We could expect a company that will still grow by 15-20% yearly. The company also has plans to increase clothes, so especially with Under Armour. Nowadays, clothes report something like 7 to 8% of the entire revenue, but Of course, we have a strong market here, addressable market that could increase entering revenue and profits. What the main risks and challenges? On the all companies on retail and all companies that the biggest moat is brand, they it's like every day when everyone wake up, we need to see if the brand is still interesting to the customer. So a new product could appear that became very popular on Strava or became very popular on runners, and so Corre could lose popularity very quickly in the same way that the product gained popularity very quickly. I think that the competitors are the main risk for Olympikus and for Vulcabrás at all. I don't see execution as a risk. I think that they are executing very well, but uh, competitors is something that they can't control, even with the better product. So I will put as a yellow flag the point of competition here. Pointing everything, I think that a company with price earnings on 8 and growing 25% on CAGR, on revenue and net profits is still very, very interesting. Operating in a market that, despite being a little bit cyclical, it's not so strongly influenced as other retail compositions. Like we see, for example, supermarkets are more constrained on recession or more dependable on some supermarkets, for example, premium ones are very, very constrained on recessions. We see that Vulcabrás has some protections, a hedge, because they have more affordable goods too. So what could be the red flag? Maybe if the company start to do not report anymore, so strong growth and start to be more flat is the moment to rethinking the position. But nowadays, I think that's a very good Brazilian company. So thank you for follow, and I hope you have liked the video.